You're listening to the Property Management Excellence Podcast for insights that drive rapid rental growth.
Welcome back. It is great to have you with us. My name is Alex Whitlock. I'm the co-founder of Managed. You're with the PMX podcast. My focal point at the moment is really around the current marketplace, and we are all very well aware of the changes that have taken place, but I see it as being a marketplace of considerable opportunity. Change means that businesses can advance, and I think the best businesses are built at times of either change or adversity, and that's certainly what we're looking at now. I've got a guest with me today who I've known for many, many years. I actually was introduced to my guest when he was a mortgage broker some 15 odd years ago, but he is also, like myself, an investor. So I'm really pleased to bring him onto the podcast because I want to explore really the customer profile and the opportunity for property managers to connect better with owners and investors. And I feel that in a time where there's probably never been greater pressure than there is now on owners, having an understanding of what their level of understanding is of property, what their level of understanding and expectations is around a property manager, and their absolute need for a partner has never been greater. And I think this is where great businesses, next-gen businesses, attraction businesses will be built from here. Ross Le Quesne is currently a buyer's agent with KHA Partners. Ross, how you going? Welcome to the podcast.
Thanks. Great to be here, mate.
I've talked to you many times, usually focused on talking directly to investors. And I thought to tap into your significant experience and knowledge, this time not to sort of talk to investors about investing, but to talk to property managers about understand the psyche of investors. And for me, I think understanding the frailties, the real lack of experience that many investors actually have. We talk about, we label people as being investors, and that almost makes it sound as if they know what they're doing. And you and I both know that many people that have investment properties, they're not really investors. They just so happen to own an investment property. They actually really are not that educated.
Yeah, definitely. And, that's one of the first conversations that we have when we're talking to property investors is to take it away from the transaction and ask them the question, why are you actually investing in property? And when the answers that you get when you ask the question, because even if you think about someone, even buying a home, right? There's a reason behind why they want to do it. Otherwise, everyone would rent, right? And normally it's got something to do with creating some sort of financial freedom. And so they go into it with an idea and probably can't even define what the end goal is a lot of the time. But, we help to sort of help them define what that end goal is. And, when it comes to owning an investment property, and we're talking about property management today, the property management is just one of the things that helps them to get to their end goal, right? Which is that, we'll call it financial freedom or whatever, but it's a big part of the puzzle, right? And I know for myself, with all the changes that we've been through in the last year, we've had rising interest rates, we've had the global uncertainty, now the tax changes with the recent budget has all got you sort of questioning. And, as many property investors, we all feel poorer because of the inflationary pressures. But on the other side, if we look at our wealth has significantly increased. And, I know your portfolio from working with you in my mortgage broking days, and I know looking at my own property portfolio, even though I'm feeling cash flow poorer, if I look at the other side of the equation, the wealth equation, my properties have increased significantly in value, right? So it's kind of, as a property manager, we're managing the sort of the balancing the cash flow that comes in, which has a lot to do with how that property's managed, the expenses, the rental income, ensuring it stays up with market, ensuring we're not paying for unnecessary things that we don't want to pay for, but at the same time ensuring that we're managing the asset so it achieves our long-term goal, which is actually creating wealth. All right, so yeah, it's interesting.
I think property management is perfectly positioned to grow into an area that they currently don't go into, which is not doing the daily doing of managing a property. And this is what all property managers do. They are all responsible for making sure that properties are compliant, that they're tenanted, that they're maintained, that they get leased when they need to be leased. But everyone does that. I think the X factor for the industry is to add value to investors. And what I want to do, Ross, let's just go back to your journey. I know it well, but when did you decide you wanted to buy investment property? And tell me about what you actually knew and understood that. If you go back all that way, what did you actually know back then, or compared to now? What did you know back then compared to what you thought you knew?
Yeah, I mean, it's experience has taught me a lot of lessons. I started investing I bought my first property in 2011, right? So it was a little property out in Penrith, a suburb called Cranebrook. I think the property was about $260,000 back then. But even, that particular property, whilst it looks good and the numbers look good on paper, what you need to factor in is the expenses that go along with owning a property. So whilst your headline sort of rental yield may look great on a property, it's the sort of the ongoing maintenance and things that you need to spend on a property that I think as a first-time investor, you don't factor in all the costs that actually go into owning investment property. And so whilst that property, has probably tripled in value in a 15-year period, if you look at, I've had to spend some money along the way, which affects my holding costs and my ability to hold that property long term. So it's, I think it's probably that, not just looking at the headline yield that you're going to get and really sort of thinking about, what are the potential things that this property is going to cost me along the way?
I can tell you, Ross, from when I bought my first property, I bought off the plan in Melbourne in the late 90s. And I had no clue about the difference between gross and net yield. Just totally naive. I was so excited about buying a property. I realised there'd be some rental income, and that was going to be important to offset my mortgage. But I remember getting the first statements through, and I don't know, sort of $400 a week or whatever it was, and I couldn't actually understand why I wasn't getting $400 a week into my account. Right? You don't know this till you know this. The reason we're going down this path is because PMs know this, and whether you've got 100 in your rent roll or 1,000 or 5,000, you have this substantial knowledge and data at your fingertips to be in a position where you can help educate and advise and discover to what level of experience, investors are actually coming in. We call people, if you've got an investment property, you call them an investor, but do they actually understand investing? And Ross, I'm going to go back as well. You work as a broker. You must have seen people buying properties where you've helped them, done your job to help them secure finance, where you must have sat there and shook your head at what they're buying, right?
Oh, definitely. And, something that, comes to mind is, what appears to be a great...
Don't say, please don't say it's any of the properties that I've bought. I like to think I'm a good investor.
An example back in the day was, like a Gold Coast apartment, right? So, at that point in time, looks great, right? The return, the headline yield might be like an 8% yield, right? But then you look at a number of the sort of the different risk factors that go into it. So it's got high strata, it might have lifts and pools and all of these things that go into a high strata cost. So then, as you said, that gets taken off the gross yield. Like back in that time in sort of, the 2000s, Gold Coast was very boom and bust, right? So you may have short vacancies, but then you've got two massive big towers that get built that add all this supply into the rental. And now you've suddenly, rather than having a low vacancy rate, you've got a high vacancy rate, right? So you don't even have that consistency of tenancy in the property. So, something like... that whilst it looked good on paper, when you really do the numbers and look at that, I think the net yield was, down to a couple of percent, right? Because you strip out all those costs from it, and the growth in those particular properties wasn't great. Yes, they've done well over the last sort of 5 years, but back in those times, you wouldn't have got that same level of growth as you do now. Some of the other examples that we're seeing at the moment is, people buying off the plan 1-bedroom apartments in areas like South Bank in Melbourne, right? And on the guise of pretending to get great advice, they've ended up with these investments that are now worth $200,000 less than what they paid for them, right? And if that was your first property as an investor, you're going massively backwards and you're in that negative equity with nowhere to go. Right. And so it puts the wrong decision can put people in a massive hole and stop their whole investment journey from moving forward. Right. So, it's yes, it is around investing, but it's also about smart investing, buying the right asset and looking after it.
And this is the thing as a mortgage broker, Ross, you've got to be very clear and upfront with your customer. And of course, look, your job as a mortgage broker is to go and secure finance, but you address every single little uncomfortable detail with them. And again, I'm coming back into, I'm looking at ways I can highlight opportunity for property managers. And every business needs a point of difference, right? And doing property management is not a point of difference. Having great service and a lovely team is not a point of difference. But being able to provide insight and advice around the realities of property ownership is a point of difference for property managers. And I can tell you that in 30 odd years of working with PMs, there have only been a handful that have actually had the courage and the ability to lean into this. But as a mortgage broker, it's bread and butter. You tell people, you go, look, the number of times I've had conversations with brokers where they've said they've got concerns because I've been looking, you've been involved in many purchases with me where I'm looking at a capital growth play, but I have to address the fact the yield is going to be low, and you end up working with the broker, to work around that. I think that there's much to be learned around understanding depreciation, understanding now, who the customer is and what their situation is. Is the property negatively geared? Was it pre, change in law? What are their goals and their expectations?
Oh, definitely. It's, I've worked as you said, as a mortgage broker. I've worked as a business coach, and I'm a property investor, and now obviously the buyer's agent. And exactly what you said in terms of the difference between a good property manager and a great property manager comes down to the relationship. And again, it's not rocket science. It's in any business, right? But what works in terms of a good relationship is really understanding, as you were mentioning, what is that person's motivation? What is their goals? What are they looking to achieve throughout their property? And understanding what goes deeper, right? Because the ability for them, again, it might be around, and as a mortgage broker, we understand the play is this is their first investment property. I'm looking to use this property as a stepping stone to get into my second property to increase the value and to look to do something else, right? So knowing that as a property manager and having the contacts, again, you say, for this property, if you do the liquor paint, we've got these tradespeople, and you potentially could, the flooring would really lift this property. Not only would it give you an extra, $100 in rent, but it also potentially increase the value of your property by $50,000, which would allow you to get to the next step in your property. Have you considered that? Do you want me to, talk to my team around doing that? Right. So as an investor, that is going to that sort of next level and going, okay, this person really understands me on my journey, where I'm at, what I'm looking to do, and is being proactive in giving different ideas that I may not have considered. Because, one of the things that we look at, and even now in terms of the opportunities that we're seeing on the ground as buyer's agents, the properties that are selling are the marketable properties. And the where really good discounts can be found at the moment are those sort of areas where properties may need a little bit of work and some cosmetic renovations. And, property managers are in that sort of great sweet spot is because they're constantly working with professionals. They're getting to see the work and understanding who's good and who's not. And those types of sort of relationships that they can have can be gold for a potential investor to really unlock value in the marketplace.
Ross, we're going to take a quick break there. When we come back, I'd like to maybe dig a little bit deeper into some of the attributes that you look for, because you obviously refer your customers to property managers in the areas you're buying. So let's drill down into that. Don't go anywhere. Welcome back. Great to have you with us. Alex Whitlock with you. Ross Le Quesne from KHI Partners. Ross is a property investor. He's been a mortgage broker, business coach, and has been a buyer's agent now for quite some time. Ross has always had the skill set to be a buyer's agent. Ross was my mortgage broker for many, many years, and he has also bought a number of properties for me recently. We've had great fun down in Melbourne, Ross, buying properties down there. You've bought for me in Sydney. So I know the way you operate very well. What I don't know though, Ross, because the properties that you helped me purchase in Melbourne, I put with my existing property manager, and indeed the property you helped me purchase recently in Sydney has gone with the property manager that I use there with new management. It would be really valuable to give our audience some insights into the attributes that you're looking for when you choose the partners where you place your customers, your investors.
Yeah, definitely. And, communication is really important. I'll give you an example of a scenario we had the other day with a new client that we recommended to a property manager. And so this property manager was very proactive, right? Even before settlement, was, proactively getting access to the photos that was used in the campaign and advertising it, constantly following up our client to ensure little things were done, like renovations. You need to have compliance checks and so forth. So being proactive, making sure, and sort of taking the step rather than, and again, they hadn't even signed the agreement at this stage, but was just constantly following up and had excellent communication. So there was no real choice for our client whether they proceeded with this particular property manager or not, because they were so far all over it. They didn't have to shop around because the communication skills, the follow-up, the diligence that this person was sort of executing before they even got the agreement signed was next level, right? And this, not only is a good reflection on the property manager, but it looks good on our buyer's agency business to have someone who is so proficient, right? And so, that's what we're looking at in terms of, because you and I, Alex, we're classic examples, right? Self-employed business owners, we're busy, right? So we want people who are proactive and make it easy for us to do business with it.
I'm so glad you said that, Ross, because I know that you're a very, very experienced investor, and I know that you've got a substantial portfolio. I've got a fairly sizable portfolio myself, but I don't have time. We call customers of property management businesses investors. That makes them sound as if they spend all their time investing, right? It's a really bad label for a customer, an investor or an owner, and I think by default most rent rolls are made up of investors moreover than owners who are sort of living interstate or maybe living overseas. So these are people that are not spending all their time on their investment. They have bought an investment property. A lot of investment properties are not great investments. I'll be really clear. How many times do we see where people have bought properties, like you give you a scenario around the Gold Coast apartments, but it happens all the time. And what's also really important to bear in mind is sometimes investors don't really know why they're investing. They've got this belief that property is a good idea for them to purchase, but they don't, particularly new investors, and there's not many investors, Ross, with more than 2 properties out there. I'm sure you'll know the data better than myself, but most people have got 1 or 2 properties, right? Now, they may know that property is or believe that property is a good investment, but they don't really understand the true mechanisms that impact how suburbs grow in value, overall trends, the impact of interest rates, supply and demand, and so on and so forth. So this is where for property managers to actually understand the frailties of most investors and to step in, and you talk about communication, but it's also about providing information and support, and particularly when picking up from a buyer's agent that's entrusted the PM with their customer to pick up the baton and help advance that journey. And I think that's a big thing.
Oh, definitely. In terms of, I think the stat was, I think it's 85% of investors only own one or two properties. So there's only a small percentage that own more than two properties. But in terms of, around that sort of communication, I know I'm constantly telling my property managers, don't hide behind emails. And a lot of property managers, whether it's the fact that they're continually delivering bad news, like it's something I have to pay for or a quote that I need to review or something, but I'm constantly telling them, pick up the phone. Hey, if there's, because, that way you can understand my situation. And there is a lot going on, as you said, in terms of, I know my portfolio, for example, a number of years ago in COVID, it was easily paying for itself. I think rates were about 2.5%. I was locked in fixed rate, 2.5% interest only. And now, we're looking at 6.5%. A lot of my loans have gone to principal and interest, and no longer is that the case, that it's washing its own face, right? I'm having to put money into the portfolio to keep it growing and to keep it moving, right? And so that sort of understanding, rather than just blindly sending off an invoice and expecting me to say yes and pay, to pick up the phone, have a conversation, to talk about the different options, rather than just presenting me one quote, say, hey, this one came in a little bit higher, rather than it's, a little bit higher, what we potentially do is X, Y, and Z. I had a perfect example from a property manager that we settled on a property the other day where, the air conditioning wasn't blowing old. It wasn't that old of a unit, but the cost to replace was something like $9,500 in replacement costs. Rather than providing multiple quotes and different options, they just sent it to the client to pay. I got involved, and we managed to get different people to look at that particular option, and it worked out for a cost of $450,000. She could regas the units; they didn't have to be replaced at this point in time. And so rather than spending $9,500 on a whole new system, there was a $500 fix. But it shouldn't have been up to us to sort of get involved with that. A good property manager would go, oh, this quote looks a bit high. What are we going to do to solve this particular issue, right? So, to think from the investor's shoes and take the next step proactively, hey, this quote came in, so this is what I've done to solve the problem. Very few of them, sort of do that. And a lot of the cases, they won't even question the quotes that you've got. It's up to you as the property investor to question the quotes, where that's shouldn't be our role. As you say, they give the investor too much credit sometimes, because they're the ones that are dealing with these things day in, day out.
So I think there's I'd like to unpack one part of this, Ross, which is the picking up the phone bit. But I think that there is a challenge in property management, and it's a structural thing. And it's not the PM, the individual who works in the agency. It's usually a leadership thing where, if people are not given guidance as to how to get 3 quotes, if they're just left to do their own thing, then they're going to do the best they can do. But the picking up the phone bit, I think, is really, really important. So, and as a salesman for many years, having to pick up the phone and sell, for you as a mortgage broker, where you're on the phone constantly dealing with problems, being on the phone is a pretty daunting prospect, and delivering bad news is even worse. So just expecting property manager, and I'm just sharing my sort of thought process here with my understanding of being on the phone and speaking to people. If you suddenly start picking up the phone when the customer hasn't been educated and hasn't been onboarded in the right way, it's a pretty frightening prospect, because suddenly you're just picking up the phone and going, yeah, guess what, Alex? I've got bad news. that's a difficult thing to do. The opportunity comes at the front end with onboarding the customer. And as you said, Ross, with the scenario where you just, onboarded a customer recently with a proactive, communicative property manager, you set the tone at the beginning. Because if you build a relationship of trust with your customer, then picking up the phone to deliver financial news, it isn't bad news. If I have a conversation with a PM that says, "Oh, Alex, yeah, I see you bought this place. Wow, you're going to have some maintenance to do there." Oh, okay, why is that? Well, it is 100 years old. Yeah, right, okay. What do you reckon? Oh, well, look, I can see you're probably going to have some problems with the roof. Blah, 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 blah. I'm being educated by the PM, Now, I'm giving a scenario. But the bottom line is then when the PM phones me up and said, "We're going to need to spend some more money on the property. Look, I'm here to help you make sure that you have an asset that retains its value and hopefully grows in value and is also attractive as a rental proposition. So we're going to need to make sure it's maintained." That's not a difficult phone call to have. But if I work in an agency where the culture is that we don't pick the phone up, why would I go and pick the phone up and have an awkward conversation when the culture in the agency is just send emails? So it's a challenging, the phone is a very daunting business implement if not used the right way. So it's kind of difficult. You've got to start at the beginning.
Yeah. And I mean, you own a number of property, as do I. How many of your property managers will pick up the phone to you when you've got an issue?
Not many. Only usually when I have not seen, I try and be as responsive as I possibly can. I've got probably 20 odd properties in my portfolio. I've got about 16 in my own name. So I have an awful lot of emails coming to and fro, and often I miss requests for maintenance. So some of them will, after multiple when they try to contact me via email, then they will give me a call. But look, I mean, I know that they are maintaining the property and it's very rare that a PM will put through a request that isn't reasonable. And I even had so I'll give you a scenario. I had a call from, or a note from a PM where the tenants had cleaned the oven using something odd and had taken the paint off it or taking the finishing off it, and then they were demanding that it was repaired. And the PM saying, no, that's their problem. They've damaged the oven and it's not up to you to repair it. But look, not very often is the short answer.
Yeah, not very often. And that's, I'm the same. I've got someone that sort of manages my portfolio and does the books, and I run it a bit like a business, right? And so I've got a separate email address that it goes. So normally the emails are dealt by the team, but sometimes some things are missed. And then, as you say, they will pick up the phone and sort of call. But I'm astonished by, when I go back and look at the email history sometimes, how long they've waited until they got to the point where they actually picked up the phone.
Phones, yeah. Like I say, Ross, I think you've got to look at how that phone is used from the very, very beginning. But this is the opportunity moving forward. Look, we'll take a quick break there, Ross. When we come back, I'd like to, as well as sort of rounding off this sort of thought process, I'd have a little bit of chat about the market at the moment. I think it's a very, very interesting phase. I think there's a lot of good news, in many ways that can be conveyed via the PM to owners around what's likely to happen to rentals moving forward. And again, I think this is a real opportunity to build trust and connectivity with owners rather than just being the deliverer of bad news, because a lot of good news to come as well. Don't go anywhere. We're back in a couple of seconds. Welcome back. Alex Whitlock, Ross Le Quesne with you. We are delving into the DNA of owners, looking at some of the lack of understanding that owners have and the absolute opportunity that PMs have at their fingertips to step into the role with trusted advisors like Ross, not just as a buyer's agent now, but also for many, many years as a broker. I trusted Ross. I now look back and I called him way too many times when I wanted advice on properties, and he always answered the phone and never ever let me down. And I think there's a great deal to be learned. I think that many people tuning in will feel not like picking the phone up because of the structure that they're in. And I think a lot of owners are very unappreciative of what property managers do. But the opportunity I'm trying to highlight is by having a proactive relationship, there is so much value that you can add by being an educator and an informer around what's happening in the suburb where the property is located, some of the kind of the macroeconomic things that are happening, having a real grasp of the changing landscape in terms of sort of tax and capital gains and the changes to SMSF. I think that property investors are not as smart as people think they are. A lot of them don't really know what they're doing or why they're doing it. With the best support possible from their mortgage broker going through the journey of getting ready to buy, with the best support from their buyer's agent. If they use one, at the end of the day, it's the customer that decides where they want to go. The buyer's agent just facilitates that purchase. The PM is the custodian of a long-term relationship, and they are the custodian of that asset. So have courage and lean into it, and just see where you can go with that. Ross, looking at the marketplace at the moment, I instinctively feel that whilst I feel very bullish about buying at the moment, I get very excited with market changes. It's always a buying opportunity for investors. I realise that not every investor perhaps has the same amount of capital growth at their disposal that maybe you and me and a few others do. But there are opportunities for investors still. But if we look at yield is being talked about now, and I've been very focused on yield for a long, long time. Now yield is becoming very important with the changes in terms of negative gearing, obviously for new builds still there. What are you seeing in the market? What are you looking for your customers now when you're helping them choose what to buy, and what can PMs learn from this?
Yeah, so I think, looking at the opportunities, and like you, I'm buying as well. I think the smart investors see value in these times of uncertainty because less competition creates opportunity for investors. When it comes to yield, people come with a purpose. Why are they buying the property? Is it a capital growth play? Is it around cash flow? Yeah, everyone has an individual reason in terms of why, and quite often a need in terms of what they need from a return point of view. So, if you're looking for an investor that is after yield and needs that for their serviceability, they're not getting the negative gearing benefit. So for those clients, cash flow becomes important, right? So there is some options that have a higher cash flow than some of the other options, right? In terms of that are more a capital growth play. I think, for investors, what they're looking for is a balance of both. And what sort of suits them at the moment is what is going to be in demand from an owner-occupied market moving forward, right? Because I think with less investor demand, with the budget changes and so forth, the thing that's really going to cause growth in the market is buying in those areas that will be in continual demand from owner-occupiers, because as property investors, we are price takers. We don't make the prices, and especially in this market. So, it's sort of a well-located property that's in demand is going to be the thing that we're going to look for. When it comes to, looking at yield, I think how this is going to play out with less demand in the property investment space, there's going to be less properties. We're still at record shortage around the country of sort of 1.5% vacancy rate. So as there's less supply coming into the rental pool, it's going to put pressure on existing properties. And this will take some time, but what that means, yields are going to improve. And so we're going to be less concerned about, negative cash flow, because we're going to be in a position, and I expect rates to come off as well. So once you have two things happen, you have yields increase and rates come down, suddenly, these higher yielding properties become a lot more attractive to property investment, and the market goes again. Because as property investors, we realize, well, if I'm getting a yield of 6% and my rate's now only 4.5%, that makes sense for me as an investor to get back in the market. And this will drive change in the market and will lead to that sort of next round of growth. Is that what you think, Alex?
Yeah, I think so. I mean, we all, you, me, and everyone else tuning in get the same data from, Cotality and REA and the various other sources, and tightness of supply nationally, is significant. You've got some markets tighter than other. Perth still seems to be really tight, and same with Brizzy, sales in Brizzy have petered out. But with every tightening market, with every slowing market in terms of sales activity, the rental markets generally, you see that sort of rise, in rental values, or the flattening of house price values. You see that rise in rental values, and I think that that yields are going to go up. And I think that I would be, if I were in the property management game, I would be taking a very proactive approach with my customers. I'd be looking to put my best foot forward and give them, I think giving a forward view based on data, and some insight and opinion based on experience is so valuable. And PMs and anyone who works in the real estate game have such an advantage over the average punter. They'll pick up stuff on social media or on the news, and it's usually sort of opinionated stuff from journalists or from people with an agenda. I think, property managers they know their data in their suburb. They know what's happening on their rent roll. They know what's happening. They've got an idea of what's happening with their competitors. They have a lot of information at their fingertips, and I think that there is an opportunity to start to use that proactively. I also think that and if you don't understand really deeply what is happening in terms of taxation and how that's changed, then it's not hard to learn and to build a knowledge around it. Because I think to be in a position to give not tax advice, that's down to accountants, but to be able to give some insight or to be at least aware of the changes that are impacting your customer, I think is a real point of difference. I haven't had one conversation with any of my PMs around that.
Yeah, and that's on the ground knowledge. And I know as mortgage brokers we're quite the first to see a slowdown because it starts at that initial inquiry. A lot of the sales data is 3 months behind, and it's the same with the rental data, right? So in terms of the expanding numbers, the more competition at open houses, those rents slowly going up by $10 per week, are the initial data that as property investors, we don't want to wait 3 months. We want to know what's happening on the ground now. And that's the advantage these PMs have is, they're on the ground. They're seeing what's happening day in, day out in the marketplace. And there's lots of intel.
So, Ross, I'm going to throw you a question as we sort of draw to a close. I want to put yourself in the scenario where you get cold called by a property manager that's saying, I know you've got property at XYZ address. You tell me what you would want. What would be the trigger points that you would hear to make you go, I'll move that from my incumbent. Now, bearing in mind, we've already said that your incumbent doesn't phone you to give you any sort of information visibility around maintenance. They're not proactive with you in terms of your assets. So tell me what that conversation would sound like.
I think it's, why we're different is, and then they need to be able to clearly articulate why that is. And I think for me, it is that proactive communication. It's understanding the market as a property investor, that you realize that, hey, this is not just your cash flow. This is about your long-term wealth, and more than just maintaining your owner-occupied property. Maintaining your investment is almost more important, because this is going to be the driver of your future wealth. And we understand that as a property met. And, and so with that in mind, we give you advice on X, Y, and Z that is going to fulfill those needs moving forward. I think is sort of, probably what I want to hear.
It's a tough gig, property management. When it's not easy. There is, let's call it some thankless work that goes into the daily grind of being a PM. Unfortunately, owners don't see that. I have a far better understanding, through having built property management software and a payments platform. I know through looking at the tasks that need to be done, it's a tough job, but the opportunity is big. Everyone has a tough job. You can't expect owners to understand and appreciate, unfortunately, the tough job that you do. But if you want to grow and if you want to win, there's always, every property is available to be moved at any one time. If the incumbent PM isn't giving an owner what they want, and let's be really clear about this is about running a business and about growing a business, in many instances. And if the customer is unsatisfied, then they're always there to be won by another provider that actually delivers what the customer expects. And I think maintenance and all the day-to-day of property management that's kind of what you expect, right? But it's kind of where value lies. So like you say, Ross, I think just, to round off, better communication, picking up the phone, understanding the metrics and thinking, like a property professional rather than a maintenance manager and a sort of a leasing renewal. So I think that there is opportunity there to think about the customer a different way.
Oh, definitely. I think, when you understand that, and again, when I look back at owning properties over the last 15 years and the significant amount of wealth that's created, and, those property managers are really the custodians of those assets, right? And so it's a really important job.
They're your long-term partner, but and indeed, so are you as a buyer's agent, and as a broker. There are a few people or a few professionals that you build long-term relationships with, but the PM, because they are the ongoing partner of that property, and I've got with one of my property managers, I've got 7 properties with one property manager, and I keep buying with that property manager and in that particular area because they understand me as an investor, and they actually do have a proactive relationship. And I now refer my friends, to go and speak to them. And I think you may have been connected with H&B as well yourself. And
you recently connected, and they've just leased my property and got more than what we thought. So it was good results.
Yeah. So look, the opportunities are out there. Ross, I'm very, very grateful for your time. I know you're very, very busy. I really appreciate your frank and honest opinion. And I thank you for joining us on the podcast.
Thanks, Alex. Great to be there.
For everyone else, thanks so much for tuning in. Do appreciate you, listening to my thoughts and opinions. They are very much how I view the world. May not appeal to everyone, but this is the way, as an owner and investor, that I see the opportunity moving forward. Thanks very much for tuning in. We'll catch you next week.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.